welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is Market Today, a show where we'll help you understand the trading setup as well as the market strategies that you need to follow for the day. Remember, this week we started off on quite a positive note. It's the expiry week of the month as well. And of course, there is resistance that we have been seeing at 25,200, but we managed to close just above that 25,000 mark, and now would probably look to build onto those gains on the Nifty. Remember, global cues are relatively absent because the Wall Street remained shut on Monday on account of Memorial Day. But the Dow futures are actually currently trading with about 350 points of gains, with S&P 500 and Nasdaq futures also trading higher. So that could be indicating that the futuristic action on the US markets will be positive. Now, as far as the Asia markets are concerned, of course, they were mixed. They're trying to assess what's really happening with the US tariff front. Latest statements coming in on the European Union when it comes to the tariffs from US, and of course what's happening geopolitically. Remember, there are a lot of statements that are flying away when it comes to sanctions against Russia that US President Donald Trump is talking about because they're talking about how the Russia-Ukraine war is continuously escalating. Now we are also hearing that Germany has given access to Ukraine to some of its own vessels and ammunition as well. So it could be probably escalatory at this point in time. So Asia markets are somehow assessing all of that, and they are trading mixed. Nikkei was down about 0.2%. Kospi was down about 0.5% in trade. All the way ASX rose by about 0.2% in the trade in this morning trading session. Gift Nifty is indicating a positive start above 25,000. Let's see how it goes. And after yesterday's strong build-up, will we continue the gains even today? Of course, remember, 2 days from hence, we will find the expiry session, and that will be important to see too. Remember, domestically, SEBI has announced that they will limit the expiries of all equity derivatives contracts to 2 days per week, either on Tuesdays or Thursdays starting next month. And they have asked the exchanges to reply with a proposal by June 15th. They're also given to understand some of the early reports, which are not confirmed yet, are indicating that NSE is going to go ahead with a proposal of Tuesday as the expiry day. So something that we will continue to watch out for. What's happening on the institutional front? Well, foreign institutional investors net bought shares worth about just 135.9 crore rupees in yesterday's trading session. Domestic institutional investors bought shares worth 1745 odd crore rupees on May 26. Now, what we've actually seen so far, that month of May has seen a notable uptick in foreign portfolio investor flows into India, the strongest in 8 months that we have seen, despite the ongoing volatility and global uncertainty. So far this month, FPIs have been net buyers for to the tune of 256 odd crore rupees. This is the highest monthly inflow that we've seen since September of 2024. Now remember that we will also look at a whole host of stocks that are important to track, and those will be also from the earnings as well as some block deals that are going to be taking place today. I'm going to be watching out for 2 stocks on the block deal front. Interglobe Aviation, the co-founder Rakesh Kangwal is set to offload up to 3.4% of its equity in the airline's parent company, Interglobe Aviation. And this is via a block deal that could fetch as much as 6,831 odd crore rupees. This is as per reports that we are getting. The floor price, again, we are looking to see at 5,175 rupees per share. A discount of 4.5% lower than the current market price is what we are given to understand. PG Electroplus, that will be the second stock that we'll watch out for. That will be in focus today. The company's promoters are set to sell a stake up to 5.62% via block deal, again to raise 1,177 odd crore rupees. The floor price set at 740 rupees per share, and the block deal will trigger lock-in of the remaining stake for about 180 days. That's something that we can watch out for. Let's actually welcome our guest on board. We have Mr. Dharmesh Kant, Head of Equity Research at Chola Securities, now joining in. Warm welcome to you. Good morning. And I hope you have a fantastic day ahead, Dharmesh ji. Let's start off by understanding about the markets first and what's happening globally before we come on the local cues as well. Globally, how are you really looking at what's happening again on the tariff front, with the US again going back and forth with the EU on the tariffs front as well, on the 50% tariff? Now they've been put at pause till July 9. But again, the same thing is happening time and again with every country where there is no set of negotiation happening. There are statements that are running in. confusing the markets at large as to whether the statements are negotiatory or is there going to be some kind of a retaliatory measure there? Help us understand on that front. What do you observe?
Yeah, good morning, Sakshi. I think, I mean, this is more to trying to squeeze the maximum out of it. So, till the time it is tabled in black and white, these statements will keep on flowing. And knowing Trump, he's, habit of making things public for negotiating and pressure tactics through the, media is what his strategy has been. And it will continue to be like that. But I do think that negotiations will happen and there would be clarity emerging. But it's already a time. I mean, 3 months you are just dilly dallying and swinging like a pendulum from here to there. That what is going to happen doesn't work like that for the world economy. Having said that, let's not forget that US is in the pink of the health till now, as far as their numbers are concerned. So S&P 500 numbers which came out, even if you remove the top seven, that famous seven companies, so 493 companies have reported almost 9% kind of earnings growth. So that is far higher to the similar set of if you top 500 companies if you take for India, and if you remove the Nifty 50 out of it, then that numbers comes out to be around 5.5% for the entire fiscal year FY25. So their economy is doing far better than what skeptics and commentators are trying to point out. Last 3 years we have been hearing about recession, but they are far away from recession. And this year also, by own senses, they will grow at least 1.25 to 1.5% on the GDP front in, after taking into account all these tariff measures. So they are well settled, going well. I mean, a lot of noise about that government, budget getting expanded and this new tax benefit, if it comes through, $4 trillion kind of a burden would be there. But again, it would go into the consumption. The same type of strategy which our government did when they rolled out our budget, giving money hands in the hands of the people and corporates to spur the economy. So it will again balance out. To my mind, the bond selling which has happened, the money has gone into equity and some of it has come into the emerging market. It is not because of the caution on the US government that this bond selling has happened. That is my understanding of the entire situation. So things look pretty fair and stable globally. Back home domestic, the numbers have been through. Nifty 50 has surprised on the earning front. My own sense was that 7 to 8% kind of an FY25 growth will come through, but it's in double digit. 10.5% was the last when I checked of 48 companies out there. Broader market is a bit divided, but if the frontliners are going plus on, then it's an added advantage. At the same time, monsoons have progressed well. Interest rate cut should be there in the first week of June on the backdrop of lower inflation trajectory. The only now swing which is left from the positive side is the tariff deal on India and US. I thought by the time Mr. Goyal comes back, the announcement should be there, but no major statement has come out. But if that is a positive statement which comes out, then I think index wise we may slowly grind upwards. Any decline should be bought into. And structurally, sector wise, company wise, there will be a lot of opportunities out there in the offering to be taken out. Having said all this, this market still is a buy on decline kind of opportunity as we head into the July 9 deadline.
Absolutely. We are seeing a 2% drop in the pre-open tick, but this should improve for the better, 24,500 at this point in time. A 500-point cut. This is surprising, but at the same time, we will have to see whether this improves for the better because the cues have not been so negative to be indicating, 500 point of a cut. So, have patience, just keep an eye out on 907, and this should actually improve for the better. But then, Mishi, we saw that 25,000 mark coming in, and everybody had again started questioning that are we on already on the path to 26,000 now, and probably retesting the erstwhile highs of 26,277. What's the suggestion that you would probably have on the markets from here on? Do you think we have the inherent strength to again climb back sooner than later?
See, Sakshi, inherent strength is always there. I mean, the timing can still vary. The only problem with the type of earnings which played out was a confusion and lot of perplexity into the system was because there was not a clear directional kind of earning trajectory which rolled out. Even in the banking
Yeah.
space, there were quite divergence out there, and same has been with all sectors. There has been outliers everywhere. But structurally, one cannot say that, I mean, 12% or 15% kind of EPS growth is guaranteed for Indian economy for FY26. So that's the reason why the moment we reach 25,000 on the Nifty levels, it looks to be, priced to perfection based on the valuation multiple. So, I mean, 22, 23 times 1 year forward, the valuation multiple we are trading at as of now. And that doesn't give much of a elbow room, I mean, sorry, headroom for the market to go up immediately. But the flows has been very strong. Look at the SIP flows or the mutual fund flows, it has been strong. FIIs have been biased into this market and they have been sticking out. There was one-off selling which happened, but again, the flows are coming in. So, I mean, this is a catch 22 kind of a situation where it's very difficult to say how soon 26 or new highs will scale up. Definitely before
Mm.
Diwali, that is my own sense. But structurally,
Okay.
I think there's no negative in the market as of now.
No negative in the market, and that's a huge positive at this point in time. I think no negatives is definitely good news at this point in time. On the flows front, like you rightly pointed out, we are now seeing FPI stance also turning positive. I think in May so far, we've had the strongest in 8 months kind of flows into the Indian markets. Despite the ongoing volatility, global uncertainty, our own geopolitical tensions, and so far they have been net buyers to the tune of 14,256 odd crore rupees, the highest inflows since September of 2024. Do you think this can carry on, Dharmesh?
Yeah, most likely. I mean, that is what the sense is coming when we are talking to different institutions. So the inquiries are there, the orders are also there into the system. So they have been buying into the domestic market, but they are very selective. It's not that mid cap, small cap area. It's more of a concentrated bets which has been placed, and more to do with the sectors where there is a sustainability of income coming. So the growth factor may still vary. I mean, 10% can be 8%, but 8% should be there. So that is how the ballpark has been going on for them. So they are, as of now, they are fully invested into the BFSI space. So no new opportunities out there. And some buying did happen in the defense and railway space, which is again through the government of India spending, which is again guaranteed. Infra spending, cement and other materials, building materials, which we are very closely watching. Any positive flows out there will cement this inflow of FI flow into that. Yeah.
Okay, point taken. Let me talk about the block deals that are taking place now. Dharmeshi, Interglobe Aviation is going to be in focus. Co-founder Rakesh Khanwal is offloading 3.4% of his equity via this block deal. It could happen just now in the block deal window. And do help us understand, how would you really look at this stock? The stock could be opening lower because the floor price that's been fixed is at 5,175 rupees per share, as per the reports that we are getting, a 4.5% lower than the last close that we got. What exactly would you see on Interglobe?
So first is how this blockchain goes through, how fast, how soon it happens. My own sense is it will be left very fast. If it goes through, then good for the company. I mean, anyways, Mr. Gangwal is getting out of the company and the management issues are getting resolved. The company itself is doing fairly well. So now it's kind of a duopoly kind of a situation into the aviation sector. And aviation sector, any flight you take, you won't get a single seat vacant. So occupancy has been great. Crude oil prices have been too benign. I mean, $60 to $70 range is there, and that's the Goldilocks scenario for airlines industry. Almost 45% of the cost is locked in there.
Yes.
Currency, after initial depreciation, it has more or less stabilized. So for the year, there has not been depreciation INR at 85, 86, it's hovering around. So all these factors are quite positive for the aviation space, and the expansion is happening. I mean, inorganic expansion is happening quite rapidly, both airports, destinations, and the aircrafts which they are acquiring. So, to my mind, if you get an opportunity to get the stock lower, say 3 4% today at the opening, investors should be buying into it. Even traders can take a chance by buying into that company.
Okay, we'll definitely focus on that. Investors, traders both can look at the buying opportunity there. We have a whole host of earnings, news flows that are coming in that will see a reaction in the stocks as well. So let me just quickly read out all of them. It'll take a minute and then we can come back to our conversation. We'll look at Electra Green Tech. that will be in focus today. Maharashtra's Transport Minister, Pratap Sarnaik, has directed officials to cancel the tender order awarded to the company, failing to meet the delivery timeline, 1,000 buses. What the minister has mentioned is that May 22nd was the extended deadline, but even one bus has not been furnished by the company. So negative news flow, and you could see Electra Green Tech probably reacting to that news flow in today's trade. We'll also look at some earnings. We have Lupin and we have Lumax Industries, Nazara Trek, all of these names that are going to be in focus. Lumax Industries, the company's reported healthy performance for the quarter, net profit rising 22% to 44 crores, growth supported by operational momentum across segments. We've seen Nazara Tech, the online gaming company, has reported net profit of 4 crores. For fourth quarter, as against 18 lakh rupees that was reported in the last period, same quarter. The company's revenue from operations have jumped, however, 95% year on year to 520 odd crore rupees. So that's going to be in focus. From the pharma pack, I'm looking at Oro Pharma, the pharma firm, has reported 11% year-on-year surge in consolidated revenue at 8,382 odd crore rupees. This is for the March quarter. Broadly in line with the estimates, growth was driven by about 13.5% year-on-year increase in US formulations of sales, 17% jump in European formulations, with both geographies contributing significantly to the top line as well. Lupin is going to be in focus. There's news flow there. The drug maker has entered into a license and supply agreement with Steam Cares for biosimilar ranibizumab in Latin America, excluding Mexico and Argentina, which is used to treat several retinal disorders, including age-related macular degeneration and diabetic macular edema as well. So that's going to be in focus. From the earnings factor, keep an eye out on even brain-based solutions. Here, the revenue was up 15.8% this time around. EBITDA, however, still down by 51% at 16 odd crore rupees. Margins also shrunk by about 115 basis points at 0.82%. And we're also looking at an exceptional loss of 36 crores that led to the net loss coming in at 76.7 odd rupees as well. Let's look at even PTC India. The company's net profit surged to 343 odd crore rupees right there. So those are some of the numbers that we will be looking at. The markets are settling in the pre-open trade at this point in time. But Dharmeshji, looking at the last leg of earnings that we are in right now, absolutely. Has there been any positive surprises or any big that you'd like to highlight for our viewers?
Yeah, I mean, public sector banks was a good surprise. I mean, entire year they have surprised each quarter. So there the numbers were quite strong and the advances growth was far better than the private sector PS advances growth with asset quality contained. And the capital adequacy ratios are also great. Stock price still have not moved the way it should have behaved given the type of numbers they have reported. So there are a host of companies like Bank of India, Bank of Baroda, the Union Bank, Indian Bank, they all are looking pretty good. So, I mean, post this interest rate cut, which if it comes through, I think you can see a good traction coming back into them. And most of them are heavily dependent on the private sector lending as well. So, with good monsoons in place, augurs well for this set of basket. Other than that, defense companies reported a good set of numbers. There has been a lot of buzz around it. But if you look at numbers per se for Q3, I mean Q4, where there was no war and the entire thing was concluded. So the numbers based on just standalone Q4 numbers were quite great, and the order book which they are sitting on looks pretty attractive. So these two sectors were outlier. Apart from that, the one sector which I'm looking forward to surprise with numbers going forward would be the two-wheeler segment in automobiles. So Hero MotoCorp and Bajaj both is looking pretty attractive. Apart, I mean, barring these, I mean, all were scattered kind of numbers, nothing major to take away from.
Okay, got that. Let's also welcome another guest on board. We have Arpit Beriwal, Analyst Derivatives Wealth Management at Motilal Oswal Financial Services, joining in. Arpit, good morning to you. Good to have you with us. Tell us, how are you looking at the markets yesterday? Things were shaping up pretty well, above 25,000. Do you think till the expiry, the momentum above 25,000 can continue, or do you see some volatility now?
Very good morning to all. So we have seen a very good healthy bread across the Nifty, Bank Nifty and the broader market. So starting with the headline indices, we'll talk about Nifty first. So Nifty overall, we see the chart structure on the weekly scale. It is forming higher lows from the last 6 weeks. That clearly indicates that the uptrend is intact. On the daily scale, it has been quite choppy. It is trading in a range between 24,500 to almost 25,050 from last 10 sessions. So as soon as we see a dip towards 24,600, we see a buying interest. But at the same time, it is hovering near 25,050 levels. So overall, if you see, the bias will be positive. Also, we are heading towards the monthly expiry. And if you look at the option data, so tug of war is continuing between 25,000 strike, because the maximum call and put writing is seen at 25,000 strike. So that would be a key level to watch out for till the expiry. One more thing that I would like to highlight is India VIX. So volatility index has been on the higher levels, near 18 levels, because of which we are seeing very high roller coaster rides within that range. So yesterday also we have seen a good momentum within that range with Nifty along with Bank Nifty. So overall bias is positive for Nifty till it holds above 24,750, 24,800 levels on the positive side, whereas on the upside 25,100 and then positionally 25,300 is the levels we are looking out for. Now talking about Bank Nifty, so Bank Nifty we have seen relatively resilience within that range. So May series from last 4 weeks, Bank Nifty has been in a range of 1,500 points. On the downside, 54,500 is a major support. On the upside, 56,000 is a major hurdle. And within that, the Bank Nifty is trading within that range. So 55,000 there is a buying interest, but at the same time 56,000 there is some supply zone. So you have to trade within this range. However, very good stock specific action is seen within the banking and the financial pack. So apart from indices, very good action is seen in stock specific and sector specific. So that would be a view for the current week going forward.
Okay, got that. Two stock ideas quickly, Arpit, if you could help us understand.
Yeah, so first would be from the insurance pack, SBI Life. So as we are quite optimistic on the overall financial pack, so SBI Life has given a classical range breakout on the daily scale. Slowly steady, the stock is moving higher. So from the last few days, it was consolidating, but now it is all on the verge of a set of breakout above 70, 80, 70, 90 levels. So towards 1850, we can see an up move. Second would be from the pharma pack, and that is Divi's Lab, where the entire pharma pack is consolidating, but Divi's Lab is flying at life high territory. So positioning a range breakout above, Divi's Lab has given a range breakout above 6,500 levels, and slowly steadily we can see new life high towards 7,000 plus levels. So this would be a two preferred ideas within the FNO space.
Okay, SBI Live device, we'll keep an eye out on that. Dharmesh ji, let's go back to our conversation on the now domestic triggers that we are looking at. Early onset of monsoon, sir, earliest in the last 16 years is what we've seen now on Kerala, in Karnataka as well. How are you looking at the rural focus themes, agri inputs, probably FMCG as well, two-wheeler stocks you did mark out for us as well. How would you really look at the entire space there?
Sakshi, definitely our trade is on for FMCG space. So, I mean, if you look at HUL, Dabur and all, they have been beaten down quite a bit and not meaningful traction has taken place. So, just based on these themes and the disposable income getting high in the hands of even urban and semi-urban people with good farming income coming for the rural India, I think HUL stands a good chance. From a trading perspective, one can look into it, maybe 5 to 7% kind of an upside can materialize over, say, next 1 month. But it's just a trade for us and it's not an investment buy as of now.
Okay, let's look at the markets. They have opened now. Let's kickstart with the benchmark index Nifty to see how that has opened in trade. Slightly on the back foot, you can see a 0.4% decline, 24,900, but much better than the first tick that we actually saw on the Nifty in the pre-open space. But we are still 24,909 at this point in time. There's an almost 100 point of a downtick that we see right in the open. Let's look at the Nifty Bank as well to see how that one is also opening up in trade. Also on the back foot, about 0.3% lower in trade at 55,420, now 151 points lower. Let's look at some of the heavyweight counters to see how those stocks are moving in trade today. Remember, there was a lot of support coming in from the banking space, ICICI, HDFC, Reliance as of yesterday's trade. We also saw some, IT names, auto names, and FMCG names also pulling up in trade. But looks like the markets are starting on a back foot, even though the advances are still 1,082 odd, versus 464 at this point in time. So the breadth remains on the positive side, but largely all the sectors are indicating to a negative start. So the Nifty is down You have the Nifty Bank that's down in trade. The Nifty mid cap also down by 0.2%. Heavyweights like IT, auto, FMCG, banks, they're all starting on the back foot at this point in time as well. Small caps, however, just flat with a positive bias. So there is a mixed action as far as the mid caps and the small caps are concerned. Let's quickly look at some of the block deal stocks. PG Electroplast, I think there is a 10.5 lakh shares deal that is now taking place. So keep an eye out on PG Electroplast. There's a 755 is the current level, 2% downtick that we see amidst the block deal that's taking place. So keep an eye out on that. And the second one will be Indigo. We will also see that also deal shaping up in trade just a bit from now. But sectorally, like we were talking about, the sectors that are positive today are again defense, PSU banks, capital goods, financials, those, and even some metal stocks that are holding up in trade. That's as far as the positive sectoral action. But yes, Indigo is also underway as far as the block deal is concerned. Now, Indigo is starting at 53.12 at this point in time. You can actually see slight weakness on Indigo as well, but I think the deal is now done. As far as Indigo is also concerned, we'll start to get those details just in a bit for all of our viewers as well. Yes, there is a large trade of 12,330 odd crore rupees. That's the value at which the large deal is done at this point in time. You see slight weakness on that front as well. Let's quickly look at some of the other stocks that we should. So, the details are coming in now. Let me just hold on to Indigo for a bit. 2.26 crore shares. That's 5.8% equity. Worth about now 11,928 odd crore rupees has exchanged hands. The price at which they have exchanged hands is 5,260 rupees per share. And that's the deal that's been done. The stock is down by 2.5%. 2.26 crore shares, 5.8% equity is what has exchanged hands at this point in time. Let me get Dharmeshji back. He was discussing with us on Indigo. The deal seems to be done, sir. The pressure is just about 2.5%. Would you see this as an opportunity for those who've been looking at lower levels to buy Indigo at?
Yeah, definitely, it's a huge deal. I mean, 5.8% change of equity, almost 12,000 odd crores, and done with only 2.5% kind of a cut is, I mean, nothing compared to the size of the deal. So I think this is a good opportunity. 5260 is the price. I mean, for day traders, we'll take that as a base price for the day's trade. But a good opportunity to buy into Indigo right now.
Okay, good opportunity to buy Indigo at this point in time. Let me just read out for all our viewers some of the stocks that you should be looking at from the broadest index that's moving up. Cosmo first, 5.5% higher. Electra Greentech, we talked, it's down by 5.7%, by the way. BSC, after 2 days of gains, after the bonus split, it's down by 0.6% at 2431 at this point in time. Bajaj Healthcare is down by 7 odd percent. But Bayer Crop Sciences, that's up by about 6% in trade. Akim's Drugs post earnings also up by about 5 odd percent. We're also looking at KEC International, although it missed the estimates, but it's up by about 4.5%, mainly on the guidance that they have given. DAM Capital up by about 3.3%. GE Vernova TND, that was up and about yesterday, is another 8% higher in trade. So very strong move that is being seen. Let me get across to Arpit now. Arpit, how do you see the opening and what catches your attention?
So actually, overall, if you see, this market has been broadly a sector specific and a stock specific action more than an index specific. And if you see, as we already discussed, that index has been a range, but a lot of stock opportunities are looking really well. So if we talk about as monsoons have come quite earlier and the pre-monsoon kind of theme has also playing out really well. So we are looking at the sectors that will definitely benefit from the rural theme and the monsoon. So a couple of sectors first would be on auto pack. So if you look at the chart setup of especially Hero Motocorp and Bajaj Auto, a very strong recovery was seen from the lower levels. And if you see when there was no one was talking about the auto index, but smartly we have seen a good recovery from the lower levels. So going forward for next 1 to 2 months perspective, Hero Motocorp and Bajaj Auto would be a preferred pick within the auto pack that are looking very good on charts because they're turning from the support zone, and slowly we can see a good 6 to 8% rally in the stocks going forward. Along with that, within the similar space, that a tractor space, Escorts. So Escorts, if you see the bigger time frame, the stock is in totally uptrend. However, from last couple of days to weeks, it was consolidating between 3,300 to 3,550, 3,600 levels. But as the theme plays out, definitely we can see good traction towards 3,600, 3,700 plus levels. So I think within the auto pack, these are the preferred counters that we're looking out that can play out for next 1 to 2 months perspective really well.
Okay, got that. We'll keep an eye out on that. But Dharmeshi, just let's discuss the auto, probably EV space yet again, because Electra Green Tech, one of the most favorite ones in the EV spaces, has seen now a negative news development. Order cancellations are happening. Now, what we've seen is for these EV majors that a lot of order flows have led to a spike in the stock prices as well. The key deal is whether they are able to fulfill such massive orders, and that's where the question mark is emerging. How would you advise investors big on Electra, JBM Auto, EV players like these in their portfolios?
Yeah, I mean, all of them are very promising. And if you look at Electra, there has been a complete change from what they used to do few years back into the EV space. And but this is surprising. I mean, I was totally taken aback by the news that they were unable to deliver, and because of that, Maharashtra government is considering cancellation of the order. So such kind of news never augurs well for any company because it creates a doubt on the execution capability and the type of competence and capacity you are sitting on. So it's never a good news. And for a new company which is into a space, it's definitely a big negative news flow. So because you have to compete with the likes of Tata Motors who are also into the EV space and supplying the same kind of buses. So I mean, the chances of you getting a benefit of doubt gets reduced to that extent. As far as JBM Auto is concerned, they are established they were into auto engineering right from the inception of the business, and they have been doing fairly well. So both of them look attractive to me. I mean, if I have to put my money, I would still put on Tata Motors, given the valuation comfort on which the company is sitting on. At the same time, the other vectors like Europe, China, US, all is opening up now. So the company is likely to walk into a more smoother ride from here on with lower interest rate trajectory everywhere across the globe with tariff thing getting settled. So Tata Motors would be a better bet. JBM, if one is an investor, stay invested because company has delivered everywhere. Though it's expensive, definitely very expensive compared to the valuation multiple of other in the same basket. But because of its diversified business into both the forays, it will continue to command a premium valuation. And sometimes what happens actually, a negative news for one company favors, counterparts in the same basket. So that rub-off effect will also happen for JBM and Tata Motors because the fund allocation which is there with this kind of a news flow, most of the funds would be pulling out of their money from the RUPTA and it has to go get invested again. So the choices will be limited. So that benefit will also happen for both the company. The space is
Absolutely.
attractive, definitely.
Okay, got that. Arpit, how about you? In case you have to choose between the auto stocks, which ones are you really bullish on at this point?
So it would be from the auto pack, it would be like subcategory within the two-wheeler space. It would be Hero MotoCorp that is
Hmm.
looking very strong on charts because it has turned from its major support zone on the monthly scale from 3,500 levels and slowly steadily the stock can move higher towards 4,700, 4,800 levels. Second would be the Tata Motors itself because if we see Tata Motors from last 7 to 8 months, it was in totally downtrend. But last month, we have seen good recovery. It formed a bullish pin bar kind of pattern on the monthly scale, negative the formation of lower highs from almost after 9 months. And going forward, definitely we can expect good momentum towards 760s, 800 levels from next 1 to 2 months perspective. So Hero MotoCorp and Tata Motor would be a preferred pick within the auto pack.
Okay, fair point. I hope this has also helped all our viewers really look at how the auto stocks are really shaping up at this point in time. Dharmeshji, which are the other pockets that you are actually turning incrementally bullish on, at this point in time? Are there any themes that you are working with at this point?
Yeah, one theme is the renewable energy theme, which
Okay.
we have been, tracking. So NTPC Green is we have initiated coverage on that, and we have the numbers were pretty good. So that stock we are still recommending. One new entrant has been the Wari Energies, though there has been, a couple of cautionary, question marks out there. First was the tariff thing, and now that tax proposal which has come, the new tax proposal takes away the tax benefit if you are putting up a renewable energy setup at your place. But my own sense is with tax benefit coming into play, this is going to balance out for the consumer. So Vari Energies will continue to gain. And multiple vectors are there. It's not only solar PV module, you have cells, ingots, wafers, green hydrogen, everything is playing out for Vari Energies. And the stock is still, management has been very confident about doubling their EBITDA this year. Order book is pretty strong. So we think current levels it can be bought into. So this is renewable energy space is one sector where we are, quite bullish on. Apart from that, defense, railway infra continues as usual along with the PSU banks.
Okay, fair point. Dharmesh, I also wanted to speak to you about the new age tech space, especially the food delivery space, Zomato versus Swiggy at this point in time. Why? Because there are so many changes happening with Eternal at this point. There are FTSE, MSCI, reduction of the weightage that's really leading to some fall. Today again, there is about a 0.6% of a cut, not too much. Thankfully, 225 is the current level at this point in time. Help us understand your view. There is an expectation of massive outflow from the stock because of the reduction in weightage and cut in the foreign ownership on this stock. How would you approach Zomato versus Swiggy at this point?
See, the space is going through many disruption, and it's a very dynamic kind of a disruption which is happening day in and day out. So the cost benefit analysis is still continuing for the space. Equity burn was the only source which through these companies were riding the wave. But Zomato has come out of that. It has proven that they can be into black with operating profits and profitability itself. Given a choice between the two, it has to be Zomato. One has to see the space has a strong potential. I mean, the penetration level at rural India and semi-urban areas is still not that great as it has been in the tier one kind of a cities. But eventually that will also happen because it's a habit. You get addicted to it, and then you don't want to go out and do the shopping another. Why if you are getting the same stuff back home with some delivery charges. So to my mind, that would be there. But let's not forget, Amazon is also in the fray. When they are going to disrupt the market, how much market share both these companies can hold has to be seen. Having said all this, if you have to single me out one company which would I be buying into space, it would be Zomato because they are the market leaders. They have been always ahead of the curve.
Okay, fair point. All right, Dharmeshji. Good to be speaking to you as always and seeking all those insights. Thank you for being with us on this show today. Hope you have a fantastic one. We'll continue our
Thank you so much.
conversation with Arpit. Arpit, how about you? Technically, where would you place your bets? Zomato versus Swiggy?
So if you see Sakshi, overall, just look at the bigger time frame structure, where the market was correcting. Zomato was still trading within a range between 200 to 250 levels. Where if you talk about Swiggy, Swiggy was in totally downtrend from last couple of months, and post the correction of the market that we have seen, Swiggy is still in downtrend. So if you see the weekly and the monthly chart setup wise, comparatively, Swiggy is in more pain. Compared, the stock is corrected from almost 550, 600 to 320 levels, whereas Zomato is corrected from 300 to around 230 levels. So relatively, Zomato, the bigger time structure is still positive, and positionally till it holds above 200, 205 levels, our stance will be positive. Though it is consolidating, but relatively on the chart wise, Zomato is definitely better price setup wise as compared to Swiggy, and our stance would be positive more on Zomato as compared to the Swiggy going forward.
Okay, got that. We'll have to focus on the markets first. 15 minutes of the candle is formed, and you can actually see sharper cut on the markets now. 200 points of a dip on the Nifty, almost 750 points of a cut on the Sensex as well. On the Nifty, there is only Hindalco, BEL, Dr. Reddy's, Shriram Finance, IndusInd Bank, and Bajaj Auto. Only a handful of 6 stocks that are up into the green. Rest of them have all slipped. NTPC, Axis Bank, M&M. They are the top losers right now as far as the Nifty is concerned. But you can actually see the heavy weighted stocks that were supporting the markets are also coming under pressure. The IT index is down by about 1%. So that's putting down some pressure. You have banks like HDFC and ICICI, which were supporting the indices yesterday. That's also down. Reliance is down by 1% as well. So you can actually see some pressure building up onto the markets. Arpit, how are you looking at this cut?
If you see, actually earlier also we were discussing that Nifty has been stuck in a range between 24,500 to almost 25,050 levels. And yesterday
Yeah.
also after a positive opening, Nifty headed towards 25,050 marks, and post that we have seen some cool off. But if you see the price structure on the weekly scale, index is still consolidating, and this has been the nature of the market. Wherever we see some uptick followed by some downtick, and then we see recovery from the lower levels. So I think this the market is kind of a buy on dip structure where dips have been bought into, but overall, our stance on Nifty is still positive till it holds above 24,750 on the closing basis. Positionally, till it holds about 24,500, the bias would be positive. Having said that, definitely there could be a swings because India VIX is at 18 levels. So within that intraday range, and today we have Sensex expiry also. So volatility is likely to be there. But I think as of now, till it holds about 24,500, 550 levels positionally, our stance would be positive. For Bank Nifty, the important level to watch out would be 55,000 levels, which is where the major make or break level is for Bank Nifty. So 55,000 is a key level for Bank Nifty, and an upside 55,555. Having said that, apart from the large caps are still consolidating with minor cuts. But overall, till it holds above 55,000, our stance would be positive. Yes, stock specific action is there, so we have to play it accordingly.
Okay, got that. Let's look at some of the other aspects in the markets itself. Let's read up a little bit on the markets for all our viewers. There is a 0.8% cut on the Nifty right now that you see. Even the Nifty Next 50 is down by 0.3% now. You're also looking at, but the broader markets, if you see, there is just slight positive. Let's actually look at this space because we haven't discussed this one too much at this point in time. The stocks that are up and about in trade are AB Fashion and Retail on mid caps, BDL, Mazagon, Cochin Shipyard. Again, the defense names that are holding up, Tata Technologies for that matter, Bandhan Bank, Max Healthcare, Oro Pharma post earnings, GMR Airports Infra. Those are the stocks that are holding up in the mid cap space. Let's also pull up the small cap space at this point. About a 0.3% uptick. So it's kind of much better off than the benchmark indices at this point. ITI is up by 8.8%. KC International post earnings. Credit Access Grameen. GRSE again post the defense move. BEML that has been carrying on the move from yesterday. Amber Enterprises from the EMS space is moving up. Aster DM Healthcare. So the healthcare pack is up. IKS is also up and about. Afcons Infra. These are the stocks that are buzzing. Let's discuss defense first with you. Arpit, how are you looking at the move that continues? Do you think there is some room for investors to take a bet?
Defense has been a rock solid index if we see, and we've seen the stupendous rally from the lower levels. So as market recovered, this was the first index to hit its previous highs. And if you look at the chart setup also, all the counters, whether you talk about the HL or BLs of these stocks within the defense sector, they're holding very strong. So we will have a couple of counters that would be on radar. First would be BEL. So if you see the chart structure of BEL, a very strong rally was seen post the breakout of about 320, 330 levels. And since then, we have seen a vertical rally. In last few days, the stock was consolidating that higher band, but still definitely it has more rally, more leg rally towards 400, 420 plus. So BL would be a preferred pick within this space with a major support around 365 for an upside move toward 400, 420 levels. Second would be, as we have been quite bullish on this counter, that is Mazdog. So if you see, Mazdog was one of the strong outperformer where the entire index has fallen much. The stock was consolidating between 2600 to 2800, and after the breakout of above 2800, we have seen one way rally towards 3600, and now the stock has cooled off from high levels, but again it has recovered from the lower levels, and definitely the stock can head towards 4000 plus levels in very short term. So Mazdog and BL would be a preferred pick within this theme within this sector, and going forward quite strong on charts as well. Going forward, we can expect good 6 to 8% rally from here on.
Okay, got that. Let's also focus on some of the other aspects then. Pharma is something that was catching on to my attention too. You talked about Divis Laboratories. Are you also looking at healthcare for that instance right now at this point in time? Maybe even the frontline pharma stocks. What's really catching your attention?
Sakshi, if we see pharma, as we have multiple categories within the pharma segment, so definitely healthcare is such a segment where slowly, steadily we have seen a very steady up move, and in spite of market volatility or somehow, but the stocks have relatively outperformed. Whether you talk about Apollo Hospital, whether you talk about Narayan Hudale, or the such stocks such as Max Healthcare, so this all counters has been really well. And going forward also, if we see the bigger time frame structures, we all are quite positive on this counter. As a house, we are quite positive. And if we talk about particularly about Max Healthcare, so if we see the chart structure of Max Healthcare, it is a quite strong chart structure, consolidating between 1100, 1120 to around 1250 levels. Slowly steady, the base of the stock is shifting higher, and we can definitely expect good round of rally towards 1250, 1300 plus levels. So as a space wise, definitely expecting quite positive, and especially Max Health are looking very strong on charts towards 1250, 1300 levels positionally. So this would be a preferred pick within this space going forward.
Okay, got that. We'll definitely keep an eye out on this entire space for all our viewers as well. I also wanted to get in focus the other spaces that's been off and on in focus, and that's the metal pack for us as well. Arpit, how are you navigating through the metal move yesterday? It was Hindalco, JSW Steel that has been in momentum yet again. So, how are you navigating through these fresh moves? Is this a space which is looking interesting at all?
Yeah, definitely. So if we talk about the large cap names has broadly in a range, whether you talk about JSW, Tata Steel or Hindalco, but the real action is seen in the mid caps counter within the middle pack. So if you talk about stocks such as Hind Copper, Sham Metallics or SAIL, this has been relatively because the broader market's outperforming and we are seeing good momentum. So within the metal pack, if you talk about Hind Copper, it has given a classical range breakout on the weekly scale above 235 levels after almost 6 to 7 weeks, and slowly steadily the stock looks good towards 255, 260 levels. So Hind Copper is one of a counter that is on radar for us, and risk reward is quite favorable because it's turning from its lower support zone. Second would be from the metal pack. If we talk about overall sales, so sale has been consolidating on the monthly and the weekly scale from last couple of weeks, and I think from the almost last 6 to 8 months, it has been trading within the range between 115 to 130 levels. And I think a closing above 130 definitely can give a fresh momentum towards 135, 140 levels, though that would be a positional target. But immediately these two counters are on radar for us within the metal pack, and definitely Hind Copper is very good on charts as compared to sale, but sale can be a slow and steadily counter that can see a good move towards 130 and then positionally 135, 140 plus.
Got that. Okay, we'll definitely keep an eye out on that. Let's look at the broadest index. Even though the index Nifty 500 is down by about half odd percent in trade today, there are many stocks that are actually holding up. You have Bear Crop Sciences that's up by 10.3%, GVTND that's up by about 8 odd percent in trade. We were discussing the pharma space, and it's Akums Drugs after the earnings that's up almost 5 odd percent in trade today. KC International post earnings. We've discussed some of them as well. Intellect Design Arena is also up. Arpit, we were discussing with Dharmesh ji on the monsoon related stocks, fertilizers, chemicals, agri focus. Are you penciling in some stock here?
Yeah, definitely. So we as a house has released a monsoon basket also. And if you talk about the monsoon theme, so it's a combination of two-wheelers, tractors, fertilizer stocks, agrochemical, and likewise selective NBFCs that definitely have rural exposure. So in fact, within that, two picks would be from the agrochemical and fertilizer space would be first would be Dhanuka Agritech. So if you see the chart structure of Dhanuka Aggregate, a strong rally was seen from 1300 to 1600 levels, and now from last 2 to 3 days, the stock is consolidated at high levels. But the good part is that the stock is holding at gains in spite of market choppiness, and definitely we can see a good rally towards 1800, 1850 levels. So Dhanuka Aggregate is a one of a pick within this space. Along with that, second is RCF. So if you talk about overall the chart structure of RCF, the stock was in totally downtrend, but last couple of weeks it has rebounded from lower levels, a range breakout above 140 to 142, 143 levels, and slowly steady the stock is moving higher. So I think risk reward also look quite favorable from here on, and the stock can definitely head towards 165, 170 plus levels going forward. So these two stocks would be there on a radar within this space to play the monsoon theme going forward.
Okay, got that. So all the viewers looking forward to some monsoon related stock ideas can definitely look at the suggestions that have been shared by Arpit on that front as well. Anything else that takes your attention that I've not asked you yet as a pocket or as a stock, Arpit, today?
Yeah, so there are two pockets. One would be from the cable space. So actually, if you see the
Okay.
cable space as a whole,
Hmm.
particularly KEI Industries. So KEI Industries is been quite positive. Once the stock
Yeah.
corrected post the announcement of the new players were entering in the cable business, but post that the stock is corrected and sharply rebounded from low levels. So if we see one of the
Yeah.
top quality companies within this case, and technically we have seen good recovery from the low levels. So on the daily scale, the stock is given a range breakout above 3450 levels, and definitely we can see good momentum towards 3600, 3650 levels. So KEI would be one of our space within the cable space that we are looking very strong. And as the mid cap and the small cap is in good momentum, so better to play through these themes. Second would be from the pipe space, that is the astral pipes. So if you see the long term charts of the astral pipe, it was in totally downtrend. However, we see the monthly structure, it has rebounded from its previous support zone that is near around 1400 levels, and the stock has already rallied by 8 to 10% from lower levels. But going forward, definitely it has more leg because the stock wasn't totally downtrend. But definitely going forward, as the risk reward is quite favorable and as the monsoon theme is picking up well, so we can expect good momentum towards 1600, 1650 levels going forward in next 1 to 2 months perspective. So KEI and Astral would be sectors stocks to watch out for going forward.
Okay, we'll keep an eye out on that too at this point in time. We are looking at India VIX, which is at 3.87% higher at 18.7 odd levels. So that's where the trigger is coming in from. Arpit also did mention about that, his in his earlier comments in the trade today. Mixed action completely on the sectors. Autos are down, financial services down, FMCG down, IT down by 1% nearly. Metal slightly weak. PSU banks, private banks also lower. Consumer durables also on the weaker side. Oil and gas also seeing some cuts. What is holding up? It's the real estate sector. Slight gains on pharma that we've discussed. Media stocks are up and about. Healthcare, slight bit of momentum on the positive side. So very few and far between stocks that are up and sectors that are up in trade. Let's look at the real estate names that have been holding up. Then, Arpit, do you think this is a space that will attract your attention at this point? Lodha, the likes of Oberoi, maybe Prestige, DLF for that matter?
If we talk about the reality pack as a whole, a lot of counters has been underperforming, whereas a lot of counters are showing good sign of recovery. So if you talk about the relatively strength index wise, LODA, that is macro tech developer, definitely looking promising on charts. So if you see the weekly setup, a triple bottom pattern on the weekly chart, followed by higher low structure on the weekly scale. So the stock is on the verge of breakout above 1440, 1450 levels. So I think from a positional perspective, the stock can head towards 1600 levels from a 2 to 3 months perspective. On the immediate basis, the stock looks good towards 1500 levels as reality space has been very much choppy, but selective stocks are looking good. So macro tech developer would be a preferred pick from this space. Along with that, one more counter that is there on radar is that has been much talk about is Shobha developers. So if we see Shobha Limited, if we see the chart setup wise, though it is consolidating on the lower band, but definitely a base formation has been seen around 1250, 1300 levels. And definitely as market recovers well from the lower levels, we can see good uptick in this counter also. So I think macro tech developers Loda and Shobha Limited would be counters that have to be on watch for in the realty space.
Okay, fair point. I hope this has also helped all our viewers out. First half an hour of the candle is now nearly out in trade, and we are still holding in on the negative side for the frontline indices. The Nifty now down by 0.7%, although we have recovered from below 24,800 levels that we just saw for a blip, and we are back above that 24,800 odd mark. 175 points of a cut is what we see at this point. Arpit, if somebody has to form a strategy till the expiry session, what is it that you would advise?
So we've been seeing overall index has been quite choppy, and I think looking from a expiry place perspective, our stance would be still positive till Nifty holds about 24,500 positionally. On the immediate which 24,750 is the level. So I think from an option strategy perspective, we would suggest through option strategy wise, as we have monthly expiry in next couple of days. So overall, we can suggest an option strategy to go out for, in which we can initiate bull call spread in Nifty with a view that 24,700 would be a position stop loss till expiry. expiry, and in which we can buy 24,850 call and sell 25,050 call at net cost of around 60 to 80 points, with a view that the positive bias is there, but at the same time upside is also capped. So this is a view that we can go with for the option strategy players. Whereas for the index traders, 24,700 is the level to watch out for. Till it holds above that, a bias would be positive. At the same time, we have to keep in mind that 25,050 is a major hurdle levels. So at that level, it's better to book profits, and any closing above that 25,050 would trigger the next leg of rally. So we have to play within this range and play with overall within that 150 to 200 points range for Nifty.
Okay, got that. So we'll definitely focus on that. We'll thank you then, Arpit, on that front for being with us on the show today and guiding us through various aspects into the markets and helping us with an outlook also on the strategy on Nifty as well as Nifty Bank. Thank you. Appreciate your time with us. And we'll definitely pull down all your specific stock ideas in separate chunks so that viewers of Business Today can constantly keep going back to them and noting them as well. Appreciate your time.
Thank you. Thank you.
All right, viewers, we'll start wrapping up the trade in a bit, but I do need to help you understand that, this is also a day when we are looking at, the IPO space too. That is, definitely in the buzz today. Remember, today is when Prostam Infosystems will open up its IPO. The company will offer shares starting today. The price band is set from 95 rupees to 105 rupees per share. This is a 168 odd crore rupees IPO, entirely a fresh issue of shares. So keep an eye out on Prostam. Apart from this, of course, we will also look at AP's Vopak terminals, the second day of the IPO for this one. Remember, on day one, the public issue was subscribed about 0.25 times, and that is 25% odd or 26% odd or so. The bids were largely led by qualified institutional investors there. About 40% of subscriptions came in from there. Non-institutional and retail still to pick up in trade as far as the Aegis Vopak terminals are concerned. For retail, it was about 19% kind of an investments that we saw on day one happening. Now, Schloss Bangalore, that's the Leela Hotels IPO, that also opened up yesterday in trade, but it was a very tepid start because on day one, Leela Hotels only got subscribed by 6% by the end of the day. These bids were also largely led by qualified institutional investors. 3% is what it came in from the QIB's portion. But we'll see how day two pans out for both Aegis as well as Schloss Bangalore. And the third one that opens up today is Prostam Infosystems, so keep an eye out on that as well. Let's look at wrapping up the markets now for all of you. On the Nifty, if you look, it is still weak. We have 24,800 with us at this point in time, but a 0.8% of a fall. Now, what are the key index contributors to the fall that we are seeing in the markets today? There is Reliance Industries that's contributing 23 points to the downside. ICICI Bank contributing 21 points to the downside. HDFC Bank, Axis Bank are the others that are contributing 20 and 10 points respectively. Infosys TCS is also contributing on the downside. There are only three stocks that are contributing on the positive side on the Nifty: BEL, Dr. Reddy's, and Cipla. Rest of them are contributing on the negative side at this point in time. Now, on the Nifty, beyond the surface, then we look at its all the sectors, like I already pointed out for you. It's largely on the negative side, largely pulled down by IT, banks, financial services, autos that are showing some weakness in trade today. But some pullback action being seen on the real estate space, pharma, and media stocks. Those are the pockets that are still holding up in trade. As far as the broader markets are concerned, you see Nifty 100 stocks down in 0.7%. Percent lower, mid caps flat with a negative bias, small caps 0.3% higher in trade. So there is some green as far as the broader market is concerned at this point in time. Top movers, we've already marked for you for the Nifty 500 basket. There are so many stocks that are holding up. Bear Crop is now up over 11%, ITI, GVTND, KEC International, Power India, GRSE. These are the stocks that are holding up from the broadest index at this point in time. When we look at the Nifty movers today, like I pointed out, very far and few between stocks for you on the positive side today. You only have PL, Dr. Reddy's and Cipla, but on the downside, there is Grasim, that's down 2%, Ultratech Cement, NTPC, Axis Bank and M&M as the top laggards on the Nifty as far as the trade goes. We'll wrap it up on that note, viewers. Thanks for being with us on the morning edition, but do stay tuned. We have a whole host of action with top market experts joining in, earnings conversation following, IPO coverage, everything that you need to catch up on throughout the course of the day. Of course, I'll be back at 12 noon to answer all your stock-related queries with top market experts. So stay tuned for that, and thanks for watching.
A massive milestone in India's economic march. India has become the world's fourth largest economy, overtaking Japan, storming into the elite 4 trillion club. Niti Aayog cited IMF data